This video is brought to you by OKCoin Crypto Exchange, where you can buy, sell, and trade your favorite cryptocurrencies, and you don't have to pay high fees. OKCoin has very low fees, lower than many of the other crypto exchanges in the market. You can also stake your cryptocurrencies and keep 100% of the rewards. There are no fees. Other exchanges charge fees. OKCoin allows you to keep 100% of the rewards. Sign up with OKCoin, link in the description. Hi, everyone. Welcome back to the Thinking Crypto channel, your home for crypto news and interviews. With me today is Matt Hougan, who's the Chief Investment Officer at Bitwise Asset Management. Matt, great to have you back on the show.
Thanks for having me. So excited to be here.
Well, Matt, when I heard about the Bitcoin Futures ETFs getting approved, you came to mind. I have to talk to Matt because you have a plethora of ETF knowledge. But let's talk about Bitwise. Some really cool news. You guys launched a Polygon Matic fund. Tell us about that and what else might be new on your end.
Yeah, absolutely. You know, Bitwise is committed to always helping investors gain easy access to the most exciting corners of crypto. 3.5 years ago, that meant a large cap index fund, the Bitwise 10 crypto index fund. A year ago or so, it meant a DeFi index fund. But what we're hearing from our audience is some investors want specific exposure to very exciting assets. Obviously, Polygon or the Matic token is one of the most exciting areas of crypto right now. For people who don't know, one of the big stories in crypto is that the Ethereum blockchain is clogged, right? Fees to use it are up. It's very congested. I think prices are up something like 4,000% over the last 12 months, which is insane. It's a sign of how exciting that is. It's a good problem to have, but still a problem. Polygon is one of the solutions to it. It's a level 2 solution. It allows you to dramatically increase the throughput of Ethereum. We're seeing a lot of app activity. It's probably the number one play in that space. And so we wanted to create a fund that let people make a bet on that specific asset. It's not for everyone. It's not even for most investors, but for people who want exposure to Matic in a fund structure, you can now get that through Bitwise. We're pretty excited about it.
Yeah, that's exciting. And to your point, a solution to help Ethereum scale. It's a good problem Ethereum is having with NFTs and everything being built on it. That's awesome. Are there plans to add any new upcoming funds around other altcoins? I'm sure you guys are doing your research, your R&D and so forth.
That's absolutely right. If you look at the list of assets in the Bitwise 10 or in our DeFi fund, you can see us sort of knocking down the chain. So we have a standalone Bitcoin, a standalone Ethereum fund. In the DeFi space, we have Uniswap, Aave, Polygon. I think you'll see us introduce additional single coin exposures, particularly in the DeFi space. There seems to be a significant audience that wants to make specific bets on individual assets in the DeFi space. And I think we'll continue to iterate there. I can't tell you which exact ones, unfortunately, that's secret sauce, but they're coming. We'll have another launch as early November.
So maybe a silly question I'm going to ask you, some of these blockchains are, of course, proof of stake. With the fund, are folks able to stake? Are there any rewards being accrued and then shared out?
Yeah, it's a great question. We're working right now to be able to do that through our custodial partner, which is Anchorage. We will do it as soon as we feel 100% confident we can do it in a safe, secure manner. So we're close to that point, but not there for all of the assets that we cover. We'll also be participating in governance activities and trying to be positive actors in that community. It's certainly an important part of the ecosystem. We want to participate, but we want to make sure we can do it in a safe and transparent manner.
For sure. Let's talk about Bitcoin Futures ETF approvals. Lots to go through here. Is this good or bad, or a bit of both? Because, I personally believe, and I think a lot of people in crypto want the spot, the physically backed, but the futures got approved. Tell us about that.
Yeah, I want the spot or physically backed Bitcoin ETF as well. But sometimes you take what you can get, right? And that's the case here. Look, everyone knows, I think at this point, that a futures-based product isn't a perfect product.
Hmm.
right? It faces issues like roll yield and contango, which we can talk about. That means over time, it will trail the spot price of Bitcoin potentially by a lot. Like if you look at the past year or so, a rolling futures position is up maybe, this data is about a week old, but was up about 440%. A spot position was up 440%. A rolling futures position was up about 380%. So
Hmm.
you can miss by a fair amount. But for people who didn't feel comfortable buying it through an app, for people who didn't feel comfortable with buying it directly, for people who didn't want to buy something like GBTC, this is another shot on goal. So it's imperfect, but it's better than nothing. And what we learned from the launch is that there were a bunch of people who wanted a ETF way of approaching this space, right? It pulled in $1.1 billion in 2 days. That's the fastest growing ETF of all time. So is it perfect? No. Is it a good solution for people who don't feel comfortable with the other ideas? Yes. Will we all be better off when there's a physical Bitcoin ETF? Absolutely. And that's where we're going to get, but it could take a while.
Now, does Bitwise have a futures ETF and a spot ETF in play with the SEC?
That's exactly right. We have a filing for both. So our futures-based ETF hits its 75-day approval window somewhere around November 29th. That's when it hits the window. We filed for a spot-based ETF just a few weeks ago, and that process runs at a different cadence. It runs for 240 days or up to 240 days. So that could extend as long as June of 2021 before it gets to the final point of approval or rejection. Importantly, there's a lot of reasons to be hopeful that we'll see more Bitcoin futures ETFs approved by the SEC. I can't speak to Bitwise's own, but generally speaking, they've already allowed 2 on the market. There's an expectation that there'll be many more. But on the spot Bitcoin side, that's uncertain. We just don't know. We're still hopeful that it'll get approved, but the SEC hasn't greenlit those.
Now, I want to go into Contango a bit more because I think a lot of new investors to the crypto and even just generally investing, that concept and what happens there, the dynamic may not be easy to digest or understand. Can you break it down in layman's terms for us?
I'll do my best. Yeah, it's a funny word and it's hard for people to get their heads around. The right way to think about it is that when you buy a future, it's the right to get an asset at a certain price in the future, right? So at the CME Bitcoin futures contracts settle every month. So the November contract, to make an example, settles on the last Friday of November. Contango is a situation where the spot price of Bitcoin today is lower than the price that future is trading at, right? So maybe Bitcoin is trading at 65,000 and the futures contract is trading at 66,000. The issue is what these futures-based ETFs do is they buy that futures contract. And let's say you buy the futures contract at 66,000 and the spot price is 65,000 and the spot price doesn't move for a month. You would sort of expect to break even, but in fact, you've lost money because that futures contract is going to go from 66,000 down to 65,000. This is something that's present in most commodities, right? Oil famously trades at Contango. It's very expensive to have a rolling position in oil futures. Natural gas, even more so. It's hugely expensive to have a natural gas rolling futures position. Now, I should say, it doesn't have to be that way. There's another fun word called backwardation when the opposite is true. Let's say Bitcoin trading at 65,000, the future trading at 64,000. In that case, you have a tailwind. But the issue for Bitcoin is most of the time it's a headwind. Most of the times, historically, it's been in Contango. And that means you would expect these funds to trail the spot price of Bitcoin.
Wow. It's myself, even myself, and I'm sure many of my listeners, it's a foreign concept because I have not dabbled in futures, and with crypto, I hold the assets directly and custody it myself.
Yeah. It's a long way from that, right? It's like the financialization of this anti-financial industry implement. So there is some irony in that. But again, for some investors, they just don't feel comfortable. They're not as native to this ecosystem as you are, and this at least gets them in the ballpark, and maybe it's a better solution than some other products that are out there.
Yeah, absolutely. It eliminates a lot of the friction. Like they don't have to go through understanding all the wallet addresses and everything. Uh,
Yep.
so who's the ideal uh, well, I should ask this. Let me back up. You mentioned, retail can invest in this, but also institutions. So who would be the ideal institutional investors for these ETFs?
Yeah, the funny answer is I think it's financial advisors. So financial advisors are like people who work at Morgan Stanley, or maybe they're an independent and they manage money for, let's say, 50 or 100 families. And they actually control a huge amount of wealth in the US. They control something like $20 trillion of wealth. Most wealthy people don't manage their money directly. They have a financial advisor do it for them. It's a foreign concept to many self-directed investors, but that is the way most of the wealth in America is managed. The reason this is a good solution for them, and this will sound really simple and prosaic and boring for something as exciting in crypto, is that it's easy. So they have one software program, they're used to buying stocks and ETFs, and if they can just push a button and help their clients allocate to Bitcoin, that's something that they might do. To give you a comparison, Bitwise has a private fund. It's available to accredited investors. It's a great product. It costs 95 basis points. The assets are stored at Fidelity. You can buy and sell it at NAV. It basically does exactly what you would expect. By almost any academic perspective, it's better than a futures-based ETF. But let's say a financial advisor has 100 clients and they want to allocate to our private placement fund. They have to send us 100 different bank wires. And let's say they want to rebalance their portfolio every quarter. Every quarter, they have to send us 100 different, like it's a paperwork nightmare. And even though you as an individual may be better served buying it directly, these people are busy. Bitcoin's maybe 2% of their portfolio. They're just never going to do it, but they will do it if there's an ETF. So ease of use is like the most boring thing you can say about a product, but it's actually really important, particularly in financial services, particularly for these financial advisors.
So, you mentioned that multiple ETFs will get approved.
Mm-hmm.
So what would set the Bitwise Futures ETF apart from the others? And what's the game there? Is it fees? Tell us a bit about that.
Mm-hmm. That's a great question. Well, first I should say, usually in the ETF space, the first to market is the kingmaker. First to market ETFs get most of the assets. And I would, I'd love to say Bitwise will sweep in and win all the assets on futures-based ETFs. I don't think that's true. I think the first to market fund, which is ProShares BITO, will probably be the biggest for a long time. I think you'll see people compete on price. That's generally not Bitwise's approach. We compete on relationships. So when you buy a product from Bitwise, you have a relationship with our research team. If there's news in the Bitcoin space that you need to understand or be able to talk to your clients about, you can call us up. People get my email. They can call me up. And that's really what we're selling. We're selling a research-based relationship behind what is going to be a fairly commoditized product. There's not going to be a huge difference between these different Bitcoin ETFs. With Bitwise, you're really buying the firm behind it and the research we can provide behind it.
Now, once your Bitcoin ETF, futures ETF is approved, are there plans to then submit requests or applications for the other funds that you currently list? Let's say, for example, Ethereum, if you have a fund for that, or Polygon Matic, to go to the SEC and say, hey, we want to create a Polygon Matic futures ETF. Is that the plan?
Well, that's a great question. If we're fortunate enough to get our Bitcoin fund approved, we obviously don't know, but that would be great. There are CME listed Ethereum futures. And I think it's a rational expectation to imagine that both Bitwise and other companies will file for Ethereum-based ETFs as the next step. There actually aren't regulated futures on crypto assets beyond Bitcoin and Ethereum in the US market right now. You can trade futures on offshore exchanges, but they don't trade on the CME beyond Bitcoin and Ethereum. And the SEC hasn't greenlit even Ethereum yet. So you got to think like crawl, walk, run. Crawl was Bitcoin futures. Walk might be Ethereum futures. Run maybe could be physical Bitcoin, and it'll just take a progression. But long term, we're going to see all of these available in ETF wrappers, is my point of view. And I will say this, the most important thing we learned from the launch of an ETF was that there are a whole bunch of investors with real money that want to be in the crypto ecosystem, right? A lot of people said, we don't need an ETF. Why do we need an ETF? You can buy it on Coinbase. But what we saw is that $1.1 billion worth of money wanted even an imperfect Bitcoin futures ETF. So as we unlock these new asset classes and assets and categories, we'll see more of that money move into the space.
Yeah, and would it be, some of these companies that, while they would love to do what MicroStrategy and Tesla did and put Bitcoin in their balance sheet, compliance, risk, whatever it may be, if they don't want to mess with that, they're going to go the ETF route?
That is exactly right. You get a lot of confidence that it's been through the regulatory ringer. The flip side of the fact that it took 8.5 years for us to get a Bitcoin ETF of any sort approved is that raises the level of confidence that this has really been looked at carefully by regulators. So I do think, yeah, if you're a Bitcoin evangelist like Michael Saylor, you're going to figure out how to have your own wallet and do it very directly. But not everyone has that same level of passion, of understanding, et cetera. And this just, it lowers the bar to get into this space. And that's really important.
So such insightful information, Matt. You see, this is why I wanted to talk to you. I do want to touch on Bitcoin mining. We're seeing, obviously, China banned Bitcoin for the millionth time. Who knows what the count is now? They banned Bitcoin mining. Now it sounds like they want to walk it back. But what I was surprised by is a lot of miners came to the United States, not all, but some. And there seems to be a Bitcoin mining boom in the United States. What are your thoughts on that? Are you guys looking at that? And are you looking at Bitcoin mining stocks or?
Yeah, two things. First of all, it's like a giant gift to the Bitcoin ecosystem, right? One of the biggest idiosyncratic risks was the concentration of mining power in one country, and particularly in a country like China with certain autocratic overlays there. That was actually a risk to the ecosystem. And the fact that that risk was mitigated and that the mining activity moved, some to the US, some to Canada, some to other regions, just makes the network that much more robust. So the first thing I think about is Bitcoin is literally in a better place today than it was 6 months ago because of this China Bitcoin mining ban. The other thing is, absolutely, Bitcoin mining stocks are incredible companies right now. They're extraordinarily profitable. They're growing extremely quickly. There's no like clear hurdle on the horizon. So, we have a crypto equity ETF. The biggest single category in that equity ETF is mining related stocks. And I think it's a space people should look at. I come from an ETF background. A long time before there were gold ETFs, there were gold mining ETFs, and they provided different exposure to the gold space. The same thing is true in Bitcoin, but it's a really unique exposure. It's somewhat levered to the price of Bitcoin itself. And they've been able to capitalize on this short period where the hash rate has gone down to be extra profitable. So I love the space. I think it will continue to be bigger and bigger in the future.
So do you see like a history repeating itself with the gold miners and then the gold asset itself with what's happening with Bitcoin?
I do in a couple different ways. And one way that's specific to the ETF that I don't think people talk about enough. One, the launch of like gold mining ETFs and gold bullion ETFs normalize that as an asset class. I think that's happening in the crypto market. It's going to become something that most people consider. And right now that is not true. The other big thing that I really don't think people talk enough about, before the Bitcoin Futures ETF, the gold ETF was the fastest growing ETF of all time. It got to a Bitcoin in 3 days. The Bitcoin futures product got to it in 2 days. That's fantastic. But what very few people note is it took 8 years for the gold ETF to hit its peak assets. So it got to $1 billion in 3 days. It got to 10 billion, I think, in 3 years. And after 8 years, it was at 75 billion. And at 75 billion, that's a pretty big dog in the gold market. And I think that's true on these ETFs as well. We're all excited that we got to $1 billion in 2 days, but this is a story that's going to be 2 years, 3 years, 5 years in the making. I think we could wake up in 5 years, there could be $100 billion plus in Bitcoin ETFs. And that would be really material for the space.
Yeah, and we're seeing ETFs pop up around the world, and obviously crypto is a global asset class. I'm not saying that gold isn't, but it just the entry point, almost anyone can get involved.
That's exactly right. Anyone can get involved. It becomes extraordinarily easy. And the other thing that ETFs do, and you'll see this in the broader crypto ecosystem, is they put pressure on pricing. I actually, there's a lot of complaints about retail facing apps and how expensive they are to use, and how thick the profit margins are at places like Coinbase. One of the things that's going to put pressure on that is the launch of ETFs that make it, we haven't seen it yet, but we will see. Expense ratios will come down, trading costs will come down. It's going to make buying crypto extraordinarily easy and extraordinarily cheap. It's done that in almost every other asset category, and it'll do that again here.
That's a great, and see, I wouldn't have known that. And I'm sure a lot of people listening were like, wow, okay, that's a great benefit. I want to pay low fees. I don't want to pay ridiculously high fees.
Yes, yeah, absolutely. And ETFs will make that true, not just in the ETF space, but in the surrounding ecosystem, because people won't tolerate those fees if they have another way of getting at it that's also easy. The fees have been able to be maintained at relatively high levels, because that's the only easy way to access the space. So ETFs are going to collapse that fee. That's why even people who hate centralized financial entities, and I know there's some crypto people out there who feel like that, should be happy there's an ETF, because it is going to drive down prices across the ecosystem.
That's great to hear. That's a really great benefit. I want to ask about El Salvador and get your thoughts. Bitcoin illegal tender. I'm happy for President Bukele and the growth they're seeing there and the adoption. They're going to mine Bitcoin to volcanic energy. What are your thoughts? And do you see other countries copying this model?
Oh, I love it. I love it. Yeah, it's a real case of leadership. Someone has to be first. But I've described this in the past as a 0 to 1 moment, and 0 to 1 moments often get dismissed, laughed at, or minimized in terms of their impact. People look at El Salvador. It's a very small country. It faces significant challenges. It's not a big player in the global economic scene. But the fact that they've, made this step forward, and while there have been some issues, there have also been a lot of successes on the ground with it. It really is driving down the cost of remittance. It really is getting used in retail settings. Will make it that much easier for multiple other countries to follow suit. I think we'll look back on it 3 to 5 years from now, the way we looked at MicroStrategy and Michael Saylor moving into the Bitcoin market when that first happened. MicroStrategy, relatively small company, but okay, now it's Tesla, now it's Square, now it's PayPal, now it's dozens of companies. And I think that's going to be true here. It's a remarkable moment. The last thing I would say is, step back 5 years ago. Did you think this was going to happen this quickly? I know it's been a dream of the Bitcoin nation for a while to see this sort of adoption at the nation state level. But I think it felt like a distant dream. And the fact that we got there that quickly tells me that the next year or the next 18 months could be really, really exciting.
Yeah, that's a great point. I personally didn't think so, because I think Americans tend to look through the lens of America and the great benefits and lifestyle we have here, but other parts of the world, they need Bitcoin. They actually need it to fix the infrastructure and problems they have with money. And then you hear guys like Jamie Dimon bash Bitcoin, so you don't really think that it's going to happen, but the world is moving ahead.
Yeah, I think that's exactly right. It is certainly, and I think that's actually a relatively big point. We're so myopic here in the US, and we may be dealing with inflation now. We haven't dealt with it for the last 30 years. There are other places where the monetary system feels much more broken, and the centralized institutions are much less trustworthy. And I think what we've learned from El Salvador is, in those situations, Bitcoin feels more proximate to that idea as being an alternative currency at a nation state setting, or even someday a primary tool.
I want to talk about US crypto regulations. Lots going on. The SEC blocking Coinbase Lend, the attack on stable coins. We have the infrastructure bill, hasn't become law yet. We're hoping they can, remove those tax codes, laws, whatever they are. It was silly in my opinion. A lot of lending platforms are getting, roadblocked by different states. What are your thoughts? Do you think we figure this out? Congress steps in and we get, some proper clarity?
No, I certainly hope so. I mean, I think there are two things that are clear, and then there's a big fat middle where it's gray. The things that are clear are there's a good side to regulation, right? I think both Powell and Gensler have said we're not going to ban crypto. You have to give Gensler credit. We moved the ball forward on a Bitcoin ETF, which didn't happen for 8.5 years. It may not be the one we want, but it's an act of regulatory courage that we should applaud, that at least we got this. So there's a positive element, which is we're not banning crypto and we're selectively green lighting good crypto, if you want. There's definitely a crackdown element against bad actors in the ecosystem, which we should also applaud, right? There have been a stepped up increase on fraudulent activity, stepped up enforcement actions on the SEC. And so far, they by and large picked really bad actors in that space. But what you've pointed to is there's this giant gray middle. How do we regulate stablecoins? How do we regulate DeFi? What do we do about lending? Is it a security? How do we handle security status? Should crypto exchanges be considered security exchanges because they likely have some tokens, even though the SEC won't say what those are? Those are all very difficult questions. Again, there's both opportunity and risk there. Like, we would all be better with slightly better, clearer regulations on stablecoins. I think there are very few people in the crypto ecosystem that don't look at Tether and see some degree of risk, whether it's significant risk or moderate risk. People see some degree of risk in that sort of ecosystem. More regulatory clarity would be positive, but too much could constrain the growth. Yeah. And we just don't know how that's going to shake out. I think it's actually a very important question. I think everyone in the crypto industry should be doing their share to lobby and try to push for positive direction. I don't think there's anything that can derail the long-term bull market in crypto, but there are things that could make it like a 10% growth curve or 100% growth curve. And those things lie in this regulatory gray middle. I'm a naturally optimistic person. I think we'll end up on a positive side, but there's certainly risk there as well.
Sure. And I think, a lot of people who aren't scammers would agree. And, but what we don't want is the overreach. I think there's a balance, and yeah. I'm hoping, more folks can get educated. I see a lot of more advocacy groups and more members of Congress are waking up to crypto and talking about it. So I do see a silver lining there, but I think a lot of people are, while, Gary Gensler and the SEC did something great, approving the Bitcoin ETF, futures ETFs, there's a Ripple lawsuit, and he's saying stable coins and security. So people are like, what's going on? They're scratching their heads. So we're like, it's a lot of uncertainty on that front.
It's so true. Also, I mean, I won't name names, but you hear interviews with certain regulators in the space, and you can see them just struggling with how to consider even regulating something like DeFi, right? It raises relatively fundamental questions about regulation. A lot of regulation is based on sort of counterparty risk and settlement, which are not things that exist in a globally settled smart contract universe. So yeah, I agree. There's risk of that overreach, and again, can't emphasize enough how important like using your political voice and lobbying and that part of the world is to the future of crypto. We may not like that it's very important to the future of crypto. People may be resistant to like diving in to that sausage making, but it is really important. It will determine a lot on where we go from here.
Finally, I want to wrap it up with talking about the market and the dynamics of the market. I don't know how much you can speak to it, but do you feel we are still in that bull run cycle? We're going to hit a blow off top in December or spill over into 2022? And if you have any Bitcoin or Ethereum price predictions that you can share.
My lawyers won't let me share price predictions. I wish they would. I will say this. I think there's a relentless institutional bid for crypto right now. And until that relentless institutional bid is satisfied, we're still in a bull market phase. I think we were reminded of the nature of that bid by the launch of these ETFs, right? $1.1 billion in 2 days, only because there's a class of people that are on the sidelines that feel that they need to get in. The other reason we know that how relentless this bid is we had some very bad news over the summer, right? We had regulators shaking their fist at crypto. We had China banning mining. We had China banning ownership. There was sort of environmental FUD, and we're already back at new all-time highs. It shows that there's a strong bullish push, and I don't see that ebbing yet. It would take major significant negative news. Of course, we could have a sell the market thing now that we're past a Bitcoin ETF. Of course, I don't know where the market's going over the next few weeks, but as I look out over the next 6 months or a year, the defining feature of this market is that movement of institutional money into the space. And it's just, it's really large. It's a tidal wave of money. And so even low level bad news, I don't think can get in the way of that.
Matt, always a pleasure chatting with you. And you're always a wealth of knowledge about ETFs and the market. So thank you for joining me today.
This is really fun. Thanks for having me.